Hey, welcome back, my fellow investors. This is me, E.T. And today's Let's Talk video is about the CPI number, the Consumer Price Index number. It came in today. It's a measurement of inflation, and it came in today at 7.5%. Now, today is the 10th of February, 2022. And it's a little bit higher than what they expected, but the bottom line is this here: it is still high. It is at a 40-year high. The last time inflation was at this rate was back in 1982. Now, we go back to what they said, whether or not it was transitory. And when they first said that, I was like, come on now. You, transitory? Please, anyone can see that when inflation takes off, it's like letting that doggone genie out of the bottle. Not transitory. And actually, that 7.5, oh my goodness, that's on the low side if you really want to know the truth about it. Ask any American out there that's in this economy knows that it's much higher than 7.5. Give me an example. Dollar Tree. For years, everything in there was $1. You know that everything now is, over there at Dollar Tree is $1.25. That is a 25% increase. Not $1.07 or $1.08. It is $1.25. That's at the low end. Now, a lot of people don't find a problem with that because it's only 25 cents. But it's not the 25 cents, it's the 25% increase that's concerning, that people need to be aware of and need to be up in arms about. But it's all done at the government level. You know, they think that the average American person has stupid written across their forehead. And so they'll tell us anything and we'll act like we'll believe it. But for the vast majority of us who's out there every day, we know that 7.5 is a low figure. All right, so what can we do? 7.5, that's just the way it is. So what can we do? Well, a couple things. We can control our discretionary spending, and discretionary spending is nothing more than once you pay all of your mandatory bills. In other words, you pay your bills as far as your expenses, your utilities and phone bill, cable bills, that type of stuff. And then you pay for your liabilities, your credit cards, and student loans, bank loans, that type of stuff there. Now, once you pay off all your living expenses and your liabilities, what's left over is discretionary income. Hopefully you have some. And if you do, what we have to do is just kind of cut back on the spending there. We always have to look for ways to reduce our expenses. Try to get the best price when it comes to your internet bill, your phone bill, things like that there. Cut back on your utilities. Try to reduce your liabilities. Realistically, your goal should be get to the point where you don't have a car payment. Get to the point where you can start paying cash for cars. And realistically, get out of this thing of buying new cars. Used cars is the way to go, unless you're really financially independent. If you're not financially independent, you should not be having a car payment. So get to that mindset that guess what? I have a car payment. Once I pay this off, from there on out, I am going strictly paying cash for cars. And when it comes to credit cards are great if used correctly. Bottom line with credit cards is this here: you should not be paying any interest charges. That basically means you pay your credit card off every month. You don't whip out pay with that credit card unless you know for a fact you'll be able to pay it off at the end of the month. Now, some great things about credit cards is that you have various types of reward programs. It benefits the people who pay it off and keep zero balance. Just keep that in mind. I would also do not buy a liability unless you have, or get in debt with a liability unless you have an asset to pay for it. That's what you got to do. That's what the wealthy That's what the wealthy and the rich do. They use their assets to pay for their liabilities. And we're not talking about your ass. Okay, we're talking about assets, things that you own that can generate income, that can pay for any liabilities that you found that you might want to get into. You also need to continue to invest. If you're not investing, you're falling behind. You got to invest. Inflation works across the board. The prices of everything is going up. Goods and services, but also assets. So if you're buying an asset that's going to appreciate in value, that is helping out your net worth. And when you're investing, always remember, and I know right now some people are looking at what's going on now in the market. You know, in the month of January, the market went through a correction. And people got scared. The bottom line when it comes to investing is you spend time in the market. You don't try to time the market. That basically means this: you're always continuously, constantly investing. Don't put all of your money in at one time. Do the smart thing. Dollar cost average, DCA. A certain amount at a certain time period. You pick the time period. It could be once a week, could be once every 2 weeks, or once every paycheck, or once a month. But the bottom line, be consistent and dollar cost average your way into the market. And if you do that, you can care less whether or not the market is going up and down, because when it's up, you buy a few shares. When it's down, you buy a lot of shares. Bottom line is you're adding to your share accumulation. And over the long run, your trend line from investment should be like this. It should be an upward trend. So the bottom line is this here: just continue to build on your net worth, because the higher your net worth is, the less impact inflation will have on your lifestyle. Keep that in mind. So that goes back to, you need to know what your net worth is. All right, guys. With that being said, I'm going to close this up by introducing something new. I'm going to give you 3 stock picks that I'm currently have ownership of, involved in, and continue to invest in. All right, the very first one is a blue chip large cap company. This one here is Kimberly-Clark, ticker symbols KMB. It is a staples company. In other words, it produces household products. So regardless of what's going on, people are still going to need the Kimberly-Clark products. Kimberly-Clark now is currently at about $130 per share. You got to realize, don't let that price scare you off. What you're looking for is the percentage growth. And also with Kimberly-Clark, it pays a pretty good dividend. You're looking for the dividend and the growth potential of this particular stock here. It has grown to grow. The second stock that I'm going to talk to you about is a small cap growth company. The company is InMode, INMD. This is a healthcare equipment and supply company. What they have is definitely revolutionary technology when it comes to invasive surgery. The current price of this company here is $53 per share. It is a small cap company. The market cap for this company is $4.1 billion. It is a fast growing company. Take a look at their earnings. Regardless of any and everything, do me a favor. Make sure that you do your own due diligence when it comes to these stocks. Don't buy them just because I said so. What I'm doing is I'm putting this on your radar. Go ahead and do your due diligence. Take a look at that. If you're interested in those stocks, take a look at it, do your research, look at the fundamentals, look at the technicals, and figure out if this is a good fit for you. Now, InMode is a good fit for me. I like the company. I like that it's a fast-growing company. If you want to see my other thoughts when it comes to InMode, I have several videos. Go to my playlist, check out InMode videos there. My next stock is for those people who likes to need some excitement. It's a penny stock. And this stock here is Eyeless International. And Eyeless International is a merger and acquisition company focused on fire science. Once again, they have some very innovative technologies there, patented technologies that use less water to put out fires. This stock is currently 18 cents per share, and it has great upside potential. And once again, this is a stock that I have high convictions on. I have plenty of videos out there. Go ahead and check out those videos and make sure that you do your own due diligence. All right, guys, with all that said, always remember, save, invest, and apply what you know, because knowledge by itself is not power. It's the application of knowledge is power. Guys, I will see you on the next Let's Talk video. Take care. Bye-bye.